The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. This is the Commodity Hour for TFNN, and I started the show today in Tiger TV. I posted a chart for natural gas on a daily basis, going back well over a year, and as you can see, this Gartley pattern that we've been expecting has started to form. We had the rally up to the 61% retracement a few weeks ago, and now we're breaking down below the C point, which sets up lower prices in natural gas, and I'll be very surprised. Well, I get surprised a lot, but I'd be very surprised if it doesn't reach there probably within the next few days, probably by next week for sure. When we have the show, we should be near that level of support, and maybe even lower because we don't know, what's going to happen as far as how deep the correction is going. And the important thing is, and listen very closely, put your ears to the microphone now, because I'm going to tell you something really important. It's a trade secret in trading. Nobody else knows where the prices are going either, because it's all about probability, folks. No one can tell you where the market's going to go, and it's not going to be able to tell you how much you're going to make on a trade with 100% certainty. We're only dealing in probabilities, so always remember that, and you'll be able to understand, the move that we're looking at. We are having a move in gold that we've been expecting. We've finally broken out above 14.13. We'll cover that first, but I wanted to go to the U.S. dollar first because Basil was on with the U.S. dollar before he left, and I think it's important that we take a look at that U.S. dollar, because what happened when we were making the double top in the dollar index up at that 84 level, we were doing the same thing in the euro, because the euro is 53% of the U.S. dollar, and so what we were looking for was these currencies to rally, and this is just a rally in a bear market, folks. That's all it's doing in crude oil. Oh, gee whiz! That's all it's doing in the euro, is making a Gartley sell pattern. It's going to be up around that 133.40 level. We're still 80 pips away, but it certainly looks like it wants to get to that spot without too much trouble. That would be the big ABCD pattern forming at that time. So we just be patient, and we should get up there and get a good sell signal probably by either today or Monday. It could even be Friday, but, we got that non-farms payroll tomorrow, so it could be really wild tomorrow. But that's the pattern that we're looking at. Basil talked about the support in the U.S. dollar around that 81 level, and I agree with him 100%. We've come down, well over 4.5% in the dollar index off the double top, and now we are getting ready to hit some pretty good support somewhere very, very close to these levels here. So we'll be, keeping that on our trade watch list as we go through. Now, I want to switch over to the gold market here for just a second, because we have had a big move here in gold just recently, and I know I have it here in my watch list, and for some reason I don't see it. I do not know why. Why does this do this to me? But we will pull it up here, and we should be okay in just a matter of a few seconds, and I'll put it into the Tiger TV, and we can take a look at it. And we will watch this on a 30-minute basis, I believe, because that's what we were watching. And yes, and we are very, very close to taking out the longer-term resistance in this market, which is about the 14.24 level. We're only at the 14.14 right now, but all of the bottoms that we've had here in gold have been higher bottoms ever since the bottoms that we made way back on the the 19th of May. Ever since that happened, every single bottom, we had one at 786, another one at 618, another one at 786, and the last two have both been 786 retracements, and now we're getting ready to move out. All we need now is a move above the 1424 level, and we will attack that $1,480 an ounce level in the gold market. We've been really friendly on gold for quite some time because of the fact that these XAU had made the long-term, I think I should put that in there too to let everyone see it, because that's a very important chart as well. Look at the XAU and also the gold bug index. Both of those are important on a long-term basis because they go back several years, and they hit the numbers that we were looking at so nicely. And this is it's been a beautiful technical pattern from the time it made the head and shoulders pattern a long time ago to where we are now, and we're rallying really strongly off that 786. And folks, this is a weekly chart. That's really what you're looking at. Now, someone mentioned that maybe the gold will have a floor at 1415. Well, it's got to clear above 1415 by quite a bit, then rally, and then if it pulls back and stops at that 1415, then I would consider that would be that. But until that happens, I think it's too early, to tell that. But going back to this gold and silver index on the weekly basis, it looks exactly like the gold bug index. They both stopped exactly at the 786, and now we're getting ready to approach to take out the highs that we made in April, and that would be a very, very positive sign for gold. Now on the silver front, we still have silver starting to pick up a little steam, but in fact it is still lagging gold by just a little bit. And boy, I have all this set up before the market opens, and then when I start to look at it, I can't find it. Boy, you talk about being frustrated. Let me pull up the silver chart here, and we will take a look at it. Give me a second, and we will pull it up here. There we go. Yeah, silver is still lagging. It still hasn't, as you'll see here on this chart, you'll notice that this is a hourly chart, but it goes back to the lows that we're talking about. And you can see that gold is broken out to the upside here, but the silver is still lagging. Silver needs to get above the $23 per barrel level, $23 per ounce level. I have crude oil on my mind, folks. I'm sorry, but we'll talk about crude oil too. But anyway, the silver is still lagging. It really needs to get going. Now, I want to go back to the currencies. I'm jumping around a little bit too much today because I'm seeing questions and I'm trying to answer the questions and get the program done. But back to the dollar index, what we've done in the dollar index, we are breaking down badly in the yen dollar. And the reason for that is we've talked about this for 3 weeks now, because when the Nikkei Dow hit the 786 retracement at 16,000, that was a perfect within 50 points on a $16,000 contract of the exact 786 retracement on the weekly basis, and that was signaling that was the top in the dollar yen currency trade. And so you wanted to be short the yen versus the dollar at around the 102 level, and now we're at the 98 level, and it looks like we're going to go down a lot more, because this is the largest correction we've had since we blew out of the 77 level on our way to that 103 level. So we want to be watching for a good place to buy the dollar yen, but we're still quite a ways from that point of doing it. Now, this is a commodity show, but these markets run on money, and this is how they count the money, is through the Forex markets. The Forex markets are thousands of times bigger than the gold and bonds and stocks and anything else. I mean, they're huge, and they handle all kinds of traders from all over the world, all kinds of speculators, and that's why it's so much fun to trade. So this is why we're looking at this particular these instruments at this time, because they do move the money. That's the main thing. We will cover the stock market well, we might as well do a little bit about stocks since I'm jumping around like a jumping bean or a bunch of young rabbits. But the stocks have broken, below that ABCD level that we talked about yesterday at 1605. We had a really minor rally at 1603. The key to this market, folks, I've said all along, and that is the VIX index, folks. That is the one that is the really key to this market. And I will bring that up because I know I have that one in my list. And, yep, here it is. Give me 1 second. And we'll put up the VIX index, and I want to show you the same pattern again. I know it's repetition, but, repetition is the mother of knowledge, and we're trying to learn something here. But we have, we have come into this trade many times, watching these higher bottoms. And now what we're doing is we're seeing higher tops, and it's just a matter of, looking at this VIX index, seeing these higher bottoms that we've had that tells us that we want to go, a great deal higher in the VIX index, which means lower prices in the stock market. I've been incredibly bearish stocks, since early May, and then again on the 25th of May, I was very bearish because of the lunar eclipse and full moon, and but we're really getting ready to have something really large happen in the markets. And large, I mean really big volatility. We're starting to see it in currencies. We're starting to see it in gold and silver. We're starting to see it in a few commodities, not many yet. But we're starting to see volatility. Volatility is a way of measuring, people's fear syndrome, and that's what we're going through right now. The main thing that we have to focus on here is the stock market, folks. I know a lot of you folks have your money in 401ks and your Keogh accounts and your retirement accounts and stuff. And I've been doing this business for a long time, as I've said before. But this is as bearish as I've ever been. I'm more bearish now than I was in March of 2000 and October of 2007. I'm actually more bearish now than I was during those times. During the times of the high, there were some people that were looking at, the euphoria that was going on and were calling for some declines, and as I was, and I thought it was going to be very, very bad, which it was. But this time it's going to be worse. This is going to be the Flying Walinda. For those of you that don't remember the Walinda family, they were the Polish family that does the acrobats, and they had a very bad tragedy in South America trying to cross some skyscrapers during the wind, and several of them fell off with their death, but the rest of the family is still doing well. But they're incredible entertainers. But the Flying Walinda comes from the fact that, once you go over that high wire, you're in big trouble. We've got to take a break. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks. We've got a call from John in Philadelphia. Are you there, John?
Hey, Larry. Yes, thanks for taking the call. Larry, I apologize. There's much I know you want to talk about regarding
We have plenty
stocks.
of time for you, my friend, because you give me some pretty good information, and it's certainly tradable, that's for sure.
Yes, very good. Larry, what I'd like to do is, as you know, I've put on a short speculation in the new crop beans, kind of thinking that the 1330 high reached on Monday was the weather scare rally top, and that if Mother Nature gives us good weather here on out, that we have a bear market that unfolds. That's kind of my fundamental view. Would you please share with me, using your patterns, what you'd be looking at to navigate that sort of idea, please?
Well, your entry point was absolutely perfect, John, because, we had a 135 pattern on the long-term daily chart going back from December, June, and April. And then when you look at the bearish side, we had the 135 pattern going down from September to January to where we are now. And what happened was, where you were selling, and I knew you knew this ahead of time, but that high that we made on Monday was a perfect, within 2 cents, went 2 cents above it, but it was a perfect 61% retracement from the high we made in September to the low that we made, in April. You can't get anything, clearer than that. you're trading in the direction of the trend because you have lower tops. And if you looked at it as a head and shoulders pattern, you could have a head and shoulders pattern from last August as the left shoulder, the high that came in September, and the June being the right shoulder, which is lower than the left shoulder, which is what you want it to be. So this certainly has the potential to be that. And not only that, but you've got almost a 40-cent cushion in it right now. So, you put your stop at break even and, go visit one of your estates in St. Bart's. But it certainly does look bearish. And, we had the same situation, happening in corn, which we'll cover a little later in the show. But the bean trade is about as beautiful technical picture for Fibonacci and patterns that you can possibly find, because each one of the highs was exactly 61% of the other. And then it made the ABCD perfectly to the downside and rallied well over, $6,000 a bushel. And, now it looks like it wants to go at least to the, the 1230 level. That's another $3,000 or $4,000 down from where it is right now. That's the way it looks in my book.
Yes. Thank you. I'm looking in the Tiger's Den, the daily chart that you put up, and thanks so much for that. And pointing out that potential head and shoulders topping pattern. That's just terrific. Larry, could I follow up and ask you this? You and I know you've been trading the grains as early as the 1970s when you were back at Drexel.
1960s when I started trading the grains, but go ahead, John.
Excellent. I love to hear that. That's terrific. Question is this. When you are putting on, say you've made this speculation, you personally, with the short-term hourly or 30-minute charts and the pattern work that you perform, will you put on a trade like this, just sit with it, or will you find yourself doing some intraday and or intra-week trading around that type of position?
Well, maybe some intraday trading possibly, but basically on a trade like this, if I were fortunate enough to get in it, which I was not, I would only risk about 20 cents, on that trade, because that's $1,000. And once I would have covered my original investment, I would lower my stop to my second units at break even, so I would be in a free trade plus booking $1,000. Now you're in the luxury position of being up $2,000. So what I would do is I would book partial profits here, and then if you have that luxury of being in more than one, which I'm sure you do, and then put your stop at break even because you sold it right near the high. So what you've accomplished, John, is you've booked a $2,000 profit, and now you're at a risk-free trade. You don't have any risk at all in the trade, because if the market goes up and takes you out, you've lost nothing. And if it continues down, you just keep waiting to book profits. And I would use a trailing stop of around 25 or 30 cents. And because if this thing is really bearish, you could drop $10,000 a contract in soybeans, because they're right near the $13 level. So that makes it pretty difficult.
Larry, thanks so much for that. I do appreciate it.
My pleasure, John. And I'll call in any time, my friend, because you've got some great information. We got to take a break here, folks. 877-927-6648.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, I think we have a guest waiting from New Jersey. Vince, are you there?
Yes, I am.
Thank you for being so patient, my friend. What can I do for you?
You're worth it. I just wanted to discuss a book that you recommended a while back. I had a stroke, and it did affect my vision. And it's supposed to be temporary, but I am listening to this book on tape, The Art of War.
Oh, by Sun Tzu. Yes, I know that book well.
Oh, I know, because, you've mentioned it several times. And as I, go through history, the Normandy invasion and all, and I guess they read Sun Tzu's book, those guys, because they really fooled, the Germans. And I want to thank you for recommending that book. And anything else, on the audio, Larry, I would appreciate.
Okay, I would be happy to, Vince. Fact is, I'll drop you a couple email. I got a few books on audio that I think you'd probably like.
Wonderful.
All right, listen, Thanks for calling in, my friend.
Thank you. Thanks for everything, Larry.
The book that Vince was referring to is The Art of War by Sun Tzu. It was written in around 600 B.C. I don't know if you folks know this or not, but Sun Tzu is required reading by all cadets and midshipmen in all of our naval academies and Air Force Academy, the Marines, any of the people that are in military must read The Art of War that are in decision making. And the reason why is that it has some great things that still work to this day, but one of the things that was really comes out clearly is that in The Art of War, Sun Tzu talks about you must attack during the darkness of the moon, which means you have a new moon and you have darkness. And if you look at what's happened in our wars, Desert Storm, and just about anything, even when they hit Bin Laden, it was on a new moon. And the reason why is because you have that darkness as cover. You don't have to worry about the full moon brightening everything up, and that gives a pretty good indication of where you are as far as looking at your military strategies. But it's a required reading in all of those. It's also required reading in the MBA program at Harvard, Stanford, and the Wharton School of Business. And I know that because I have family that have gone to those programs, and we've discussed the book many times. It has a lot of variations of the book, but basically it's pretty easy to read in the English version. But it's a great book to have because it's got some wonderful things in it. That not only about the art of war, it's really about the art of life too, and how to handle your enemies and stuff. He says in there, you keep your friends close, but keep your enemies closer, because you want to be knowing, what you want to know about what your enemies are thinking anyway. And the enemy, in our case, when we're trading, the enemy's not the market. Boys and girls, you know who the enemy is. The enemy is us, because when you look in the mirror, you're the one that decides, you're the one that puts on the trades, you're the one that takes the responsibility. So it's not the other people that are the enemies in the market. It's you. You and me and everybody else that trades. We're the enemy. You have to determine, what's inside of your head. It's not the people that are on the other side of the trade are your enemies. Believe me, it's by far that you're the enemy. So you got to be able to fight that and understand it. Okay, now I posted into Tiger TV something we've been watching for a long time. That was the corn trade during the time when I was out. We made the beautiful ABCD bottom just like we did last June. It came in at $5.11 a bushel. We rallied well over $3,000 a contract, and now we've backed off to exactly a 61% retracement today at the 540 level. We're about 4 cents higher than that right now. That was also into the gap that we left in late May. And so to me, I think we're getting ready for another leg up in gold. How much it's going to be, I'm not sure. But this is a very low-risk buy that we've had today in corn, because if it goes below 536, you certainly don't want to be in that, because it means you're probably going to go down another 15 cents or so. But this is the setup that we've been waiting for. Whether it works or not, we don't know. And the good part is nobody else does either. So we want to keep that in mind, and we'll watch that on Monday, too. On Monday's show, even though it's not the commodity show, we want to follow this, because this is something that is set up just as perfect as you could possibly ask. You had the ABCD pattern. You had to move up, took out the previous month's highs, and then you back off to a 61% retracement. That is exactly at the gap that it left. So this is Mother God and country. It might not work the way we want it to, but if you give me 100 of these, I'll win on 80 of them, because this is a very high probability trade. And again, it's only a probability. That's all it is. There's nothing more to it than that. There's all of these trades that we're looking at are nothing more than probabilities. So I think it's very important that we keep that in mind. The Japanese yen, I've also posted that, the yen versus the dollar in the Tiger TV. And what I did was I tried to show the ratios that were coming in on the yen. And once it broke that 98 level, the fact that it was literally in a free fall, and that is pretty much what has happened. And that means that it's following along what the Nikkei has been doing, and that means it's in a major correction too. We'll be watching this Japanese yen to see what the 38% correction will be on this, but that would take us down to almost the 92 or $93 per level, 93 to the U.S. dollar level in the yen, but that won't happen for several days, because I don't think you're going to see a 600-point drop or another 400-point drop in the yen during this time. But we'll be watching that as we approach that level. I think that would be something that would be really interesting to look at. Now, I wanted to cover one other market, and that is the wheat market, because it also has been having some really nice moves, but it's not moving nearly in tandem with the corn and soybeans. The wheat has had lower tops and lower bottoms, and it looks like we want to go lower in the wheat market, not higher. And believe me, wheat can go lower and the others can go higher because they are different things. They're used in different product categories, and so it's not unusual for that to happen. But wheat does not look anywhere near like what the soybeans and what the corn looks like. So you've got to look at each one separately because they come from each particular one. I want to mention that I'm going to have Rich Anderson on next Thursday on the guest on the Commodity Show, because we've got a lot of these things getting ready for the the middle of the growing season, and he'll have some ideas on weather. And then also on the 12th of June, we're going to have Arch Crawford on from Crawford Perspectives. Is going to be my guest to talk about the stock market, because that's something that I think that we are we're always interested in that. So we need to focus on that. But most of you folks have your investments in that, and I want you to be able to see that. One thing about the stock market that is important, and that is that we've been watching Apple for quite some time, and on yesterday's show we posted a chart on Apple showing that we were very close to the 61% retracement on the downside, and we just hit that at 433 and change in the Apple. It completed the Gartley pattern. That means we've had this is the third higher bottom that we've had in Apple now. So if you like the stock of Apple, this is the place to be buying it. You don't have to risk more than about $5 a share, because if it goes below the Fib number, it's going to head down another $5 to $10 lower as a minimum. So the risk is what we're focusing on here, but it's at a point where it should hold, but we will not know until a few days whether it's going to be able to hold this low. But right now it is doing exactly what we expected it to do. I get some complaints by email that I'm too bearish, and all the fundamentals that are there that are out there in the market, and there are some good things, I know that, but the problem is I'm looking at some really long-term bearish patterns, folks, in the stock market going back more than 15 years. We haven't seen these patterns very often, but that's that's what I'm looking at. Now, there's a statistic that's there in the market that you really need to know, because it's a very powerful one, and I'm on the other side of this statistics. Since we started trading stocks actively going back to 1876, there's only been 22 times where the market was up January and February during the year and closed lower the following by the end of the year. In other words, every time the market has been up during January and February, both months, it is closed higher for the year. And that means that 22 times that occurred, and 22 times the market closed higher at the end of the year than it did in January. So you have to have two things happen. January and February have to be up, and the market has to close higher in December than it did in January. Well, that's long term. All I'm looking at is the patterns that I see unfolding right now, and I put that chart in there several times. I'm going to post it again because I think it's that important. It'll only take me a second to do it because it's got some really long-term implications of where we are, and that's the Dow Jones chart that goes back to 1998. And if you remember, the 1998 to 99, that was the tech blow-off, the dot-com bubble. And from that point, we've completed this monster pattern known as the reverse point wave. And I called it the mother of all tops because I see it in all the markets. I've seen it in London, I've seen it in France, I've seen it in Germany, and all these markets have also turned down too. And it was at the time when the Bradley model was saying, yep, it looks like this might be it, so we'll see. But I've been very, very bearish. Now, TFNN has a special program coming out with one of our former contributors, Bud Rolfe, who I think he and Basil are about as good as you can get. They've got probably 100 years experience between the two of them, and Bud has a special program that where he discusses, I think it's called, or at least I named it the Titanic Syndrome, because he really thinks that we're looking at something like what I'm looking at, something extremely negative to have happen, and that's what I fear that that's what's going to be happen. But by the same token, I look at it with anticipation because I plan to make some money on it if it does work out the way that I want it to. It will also include the bonds, because even though we're having a flight to quality rally again today in the bonds, which we've been expecting, we could get a rally all the way up to that 146, 147 in these September bonds. We're at almost 142 now, so we still have a little bit of a ways to go here. So this is these are some of the things that I'm looking at on a technical basis. And as most of you that listen in, you realize that I do not know anything about. I know a little bit about fundamentals, but I don't consider them, and I don't read about them. So they really don't enter the picture at all when I'm watching, some of these things unfold. So that's I think a critical thing to keep in mind. It's something I think is important. We've talked about some of the divergences that we see in the market, and remember the Dow Jones Utility Index, which is one of the three Dow. There's the Dow Utilities, Dow Transportations, and Dow Industrials, and utilities are already trading below the April lows. And today's close, this week's close, if we close below, I believe it's 1585 in the futures, and right now we're at 1600. If we close below 1600 in the S&P E-mini futures around 1585, that means everybody that bought stock during the month of March or during the month of May, the sell in May and go away program, will have a loss. And that's why, this could be a monthly reversal in the stock market, which you don't see those very often, especially coming after, all this positive stuff that they've been feeding us. And that, I think that's the operative word there, is feeding us. And then we will see what happens after that. So these are the things that we're keeping an eye on. But we're having great volatility, and that's what we really wanted it to have happen. We've been expecting it because we've been watching this VIX index with the higher bottoms, for quite some time. And the pattern that's there in the VIX is the same one that I think is that we've been, the comparison between these, and I think it's important to, to take a look at that, is that we have a comparison between the VIX index where we were, almost a month ago, and there, where we are in the Nikkei, several months ago. I was just showing the comparison into Tiger TV to give you an idea where we are. We're going to take a little break here, and then we'll get back and we'll discuss the Treasury bond market.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we are in the home stretch, as they say at the racetrack, and down the stretch they come. We have just completed a 50% retracement in the Treasury bonds from a high we made way back in May. That came in at the 142 level. We are of the opinion that we're going to go higher in the bonds, but we should have a little bit of resistance at this point. The markets in stocks, we'll switch over to stocks for a second here because we're a bit oversold, but we have such a tremendous bearish bias going on in the stock market that is truly amazing. The reason why I'm so bearish is because of the similarities of that VIX pattern versus the similarities to what happened in the Nikkei stock market. I just wanted to I posted that into Tiger TV so you could see that, to see that this is the same scenario. I know they're different instruments, but all these things act the same. If you took off the price and you took off the name and you took off the time, you couldn't tell which chart was which. In fact, that was one of my dreams that I wish I had. I wish I could trade something and all I could see was the chart itself. I couldn't see the price, and I couldn't see the time, and I couldn't see what it was. That would erase all bias. And believe me, I wouldn't lose very many times if I didn't have the biases that I have built in, to my own psyche after doing this, for so very, very long. So we are, anyway, so bearish in stocks, it's just, it's really quite nasty. That doesn't mean we can't get a monster rally at any time. It just means that they finally rolled over, and now we're looking at, looking like it wants to go, a great deal lower. So these are the things that we're keeping in our little armamentarium to get ready to do. We would like to, sell more stocks if we get out of if we get a rally. And since I'm on 3 days a week, you're going to get plenty of chances to do this. Probably more chances than you want, but at least right now it's starting to become a little bit more. If we get the VIX index up above 20, I really think this thing is going to really melt down, because if they've let everybody in during the month of May and then all of a sudden they slam the door and all those people have losses, I know that they're going to be talking about, it's a good buy here, it's a good buy here, it's a good buy here as it goes down, because I've been in those markets 1974, and never again will I listen to that kind of stuff, because I listened to the guy from Enron come on, and we had a physician here in town who was his family had one of the companies that was bought out by Enron, Portland Cement, and he watched all of his family's fortune disappear, and it destroyed his life. It really did. He actually got so bad he had to quit practicing medicine, and later on he passed away. But, this was a situation where the Enron people would come on and say, everything's good, everything's good, everything's good, and, all the way down to zero. And so we'll see what that. But the Nikkei, we went up to the 786 at 16,000 in the Nikkei, and that's happened 5 times before, and it went back to new lows. So just because it hit that level, it's it doesn't mean anything. But I'll be looking to be a buyer of the Japanese yen versus the U.S. dollar somewhere around the 93 level. We went below 97 so far today. But another 300 pips down in that yen, we'll certainly be watching that. We bought some corn today, so corn did exactly what we wanted it to. So we had to, have to get in, got into that. So that's it. Remember, if we get below 1585 in the S&P futures, the June futures, we're below the May lows. Anyway, that's it. Live every day in an attitude of gratitude, and may God bless. And subscribe to Art of the Charts. It's a home run, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.